In today's newscast, we look at 2014 forecasts that point to a softening in the ag equipment market, what a shift from corn to soybeans could mean for equipment sales, the new financial report from ag equipment manufacturer Bühler Industries, and the increase in demand for lawn and garden equipment. I'm Kim Schmidt, Managing Editor. Welcome to the premiere of On the Record. With overall farm receipts projected to decline by as much as 13% for the 2013-14 crop year, historical trends suggest that ag machinery sales will follow suit, according to R.W. Baird's 2014 Outlook released on January 7th. While John Deere, CNH, and AGCO are forecasting modest declines, Baird is now projecting North American dealer retail ag machinery sales to fall by as much as 10% in 2014. The Baird report also suggests dealers already have new ag equipment inventories that are too high, citing announcements made recently by dealer groups Titan Machinery and Rocky Mountain Dealerships on their intentions to dramatically reduce new equipment inventory levels in the next several months. In Ag Equipment Intelligence Dealer Sentiments and Business Conditions Update, released on December 26, 24% of dealers reported their new inventory was too high, a sharp rise from the 8% figure in the previous month. This is the fourth consecutive month dealers have said their new inventories were reported as too high. With an already difficult used equipment market continuing to weaken, Baird analyst Mig Dobre says it could lead dealers to reduce new equipment orders to work through the overhang in their used equipment inventories. This adds to the risk of inventory destocking in 2014, he says. Based on Ag Equipment Intelligence survey conducted in September, nearly 40% of North American dealers are expecting new equipment revenues to increase in 2014. Dobre says equipment retailers may have been too optimistic in their outlook for 2014. It should also be noted, livestock receipts are expected to outpace crop receipts in 2014, which could help the sale of mid-sized tractors that are typically used in livestock and dairy operations. A recent survey by Farm Futures magazine indicates farmers may be increasing soybean acres in 2014. With the price of corn falling by 40% in the 2013-14 crop year, early projections for planting intentions are calling for a significant rise in soybean acres, largely at the expense of corn acreage. On January 7th, Farm Futures magazine reported that their survey of 1,600 farmers showed growers are planning a major shift to soybeans from corn in 2014. Farmers indicated they plan to plant 82.43 million acres of beans this year, up 7.6% over 2013. The switch is also taking place in Latin America. Monsanto said its corn seed sales fell 5.2% in the September to November quarter, while soybean seed revenues jumped by nearly 16% during the same period. This shift from corn to soybean means equipment dealers will likely see softening sales on equipment, particularly tillage tools. Mike Carley with Berkey's Farm Stores in Illinois and Indiana says it will be hard to measure the impact the switch to beans will have on equipment sales for dealers, given the other changes going on in the industry, like lower commodity prices and accelerated depreciation being reduced. He says it will also depend on how many acres the customer switches over to beans. He doesn't foresee more than a 5% drop in equipment sales if the customer were to do 20 to 30% more beans than last year. Bühler Industries, the Canadian-based manufacturer of versatile tractors and Farm King implements, saw a 4.7% drop in sales in 2013 versus 2012. Despite the drop, net earnings were up 21.3% and gross profits was up 4.5% year over year. Dmitry Lubimov, president, says this was achieved through strong margins and expense control. The company attributes the overall drop in sales to lower demand in Eastern Europe, particularly Russia, and a competitive North American market. That said, sales did increase in both the U.S. and Canada. Director of Marketing Adam Reed says the company added 20 versatile dealers to its network, most of which are handling the company's full line of products, which includes tractors, self-propelled sprayers, combines, seeding, and tillage equipment. The company expects modest sales growth in 2014. Demand for lawn and garden equipment has been on the rise thanks to improved housing numbers and consumer credit. Our sister publication, Rural Lifestyle Dealer, completed its Business Outlook and Trends survey in December, and 91% of respondents expect revenues from rural lifestyle and landscape customers to be as good or better than 2013. Dealers are optimistic about aftermarket part sales growth as well. 93.7% of dealers are expecting their aftermarket revenues to be as good or better than last year. The full report will be available in the winter issue of Rural Lifestyle Dealer. Retail sales of farm equipment continued to show strength in December. The Association of Equipment Manufacturers released its December sales report this afternoon, and total U.S. tractor sales were up 9.1% year over year, with the highest increase coming in tractors over 100 horsepower, which saw a 17.6% increase versus 2012. U.S. combine sales were up 9.8% in 2013 versus 2012. Canada had similar results in total tractor sales in 2013, posting an 8.9% year-over-year gain. Like the U.S., tractors over 100 horsepower saw the highest improvement with 14.5% increase versus 2012. For combines, Canadian sales for 2013 saw a 1.7% year-over-year increase. To make sure you receive future episodes, go to www.farmequipment.com/ff/ontherecord. Thanks for watching. I'll see you next time.